the calendar is turned. Welcome to the On the Tape podcast. We're in September. It's amazing how quickly the fall comes.
Like that.
That was the snap of Dan Nathan. You heard the rustling of Danny Moses in his chair as he's excited to be here. Of course, I'm Guy Adami.
September Morn was a year ago. We did the same exact.
Neil Diamond.
I feel like we started the whole
Yeah, you were
month
singing
after.
it, though, Danny.
September Morn.
It's amazing how you're so good at that. You should do an entire podcast of just voices.
Singing.
But that's not going to be today's.
No.
Now, before we get started, and there is a lot to talk about, I don't know if this is dexing you people or
Doxing.
whatever it's called.
Doxing.
Yeah.
But last week, Dan,
Yeah.
you went to the great city of Chicago.
As did Danny Moses.
As
I
did
didn't
Danny
go till
Moses.
Saturday.
Yeah.
But you were there you were there to see our friends at CME Group,
Correct.
which you did.
Yeah.
But your primary reason for being there was to what?
It was to see Pearl Jam at Wrigley Field.
Twice.
By the way, our friends
Very
at CME, they invited us, which was
no.
amazing for them.
Yes.
You had an invite, guy.
We got to hang out with Anita and Colleen,
No, it's
which
wonderful.
was amazing, and their families. We had a great time.
Of
And
course
my
you
wife was there, and Danny's wife was there.
Yep.
Beautiful.
So then we come back to New York.
Well, that's going to be part two of this.
Yeah.
So you saw Pearl Jam twice.
Yeah.
In the course of a few days.
Yeah, 2 days. Yeah.
Flew back here.
Yeah.
And what happened?
I saw him again for 2 days. So did Danny.
So did I.
Moses.
That's
Yeah.
3 of the last 5 nights have seen Pearl Jam.
I'll just say this. I took 2 people last night with me who are big music fans, but they'd never seen Pearl Jam live, and they were absolutely floored. Dan, you've had
The
that
show last
experience,
night
too.
was, I think, was a top 5.
Yeah, it was amazing. So
Little Steven Van Zandt apparently played.
Not a fan, but yeah, they paid a little tribute to Little Steven. So it was a great couple weeks or a great week or so.
Yes.
So hopefully they're going to.
Well, apparently there's some song that sort of resonated with the two of you. Now, I'm of a certain age where I remember the band Rock Pile. Dan,
I do not.
You do not. Dave Edmunds and Nick Lowe.
Okay.
Their big hit, and they had a few, but their big hit was a song called Crawling from the Wreckage, which, by the way, we have used before as a title. So we're not going to use it here today. But apparently, Danny, the Pearl Jam sang a song that really sort of hit home with you, and I think it might sort of illustrate what we're in the midst of. So please.
Off of the new album. You know, rarely do bands that have been around this many years came a new album and actually song, and it feels like an old school song of theirs called Wreckage, right? And there's a couple lines in there. Visited by thoughts of another darkened week, how even every winner hits a losing streak, guy. The mistakes we all made and perfectly repeat.
Mm-hmm.
That's
All right,
it.
so let's take it line by line, Dan, because this actually is interesting. Visited by thoughts on another darkened week. Well, this week that we just had, another darkened week, is darkened vis-a-vis some really bad data out of China and some really weak economic data here in the United States. So once again, we've been visited by thoughts of a darkened week. So let's start there.
Yeah, interesting though. Like when you think about just kind of what's happened here, the S&P is down like 2% tops from the recent highs. You're still, despite this data, everything is focused on what sort of move the Fed is going to make. The CME Fed Watch tool is pricing in 60% or near certainty that they're going to basically do 25 basis points, but there's a 40% probability that they do 50. And so, Danny, do you think that has a lot to do with basically by the time you're listening to this, you're going to have the August jobs report? I mean, how bad does that have to be? You know what I mean? Like how much of a miss for the odds to start skew in favor of 50 basis points?
Right. So it was 100% of 25, 40 to 50 of 50. But think about this. Exactly a month ago, we were kind of in this position. There was one other thing that triggered it, which was Japan, right? Because Japan potentially raising rates again. So they had inflation data, and here we are again. The dollar keeps weakening, which is a byproduct of all of this. And now we have a jobs number. We're going to overtrade the jobs number. So since last month, we had Jackson Hole. We've had inflation still not rear its head. It's been fine. It's been in check, but there's no question. Job openings and all the stuff we're seeing. So the forecast, as you hear this tomorrow, it was 160,000 and 4.2% unemployment. I don't know which one they're going to focus on, which one they're going to trade. If the number's high, if the employment number's high, yeah, it'll be good for the markets, but people will say, oh, they're overstating it, like they're going to correct that. And if it's low, here we go again, Guy. People crying for 75 basis points, not 50. So we'll see how it plays out. But again, what do we keep doing? We keep going to listen to the companies and what they're telling us. Dollar General, Dollar Tree, kind of the haves and the have-nots will keep going. So we're getting a picture. We know what's happening.
But it's
in the
nearly,
economy.
Guy, identical to what was happening in the first week of August.
That's what I'm saying. The setup is very similar.
It's so similar, but then again, back to the wreckage, you don't even want to do that. I mean, it just doesn't seem like it's going to play out the same exact way.
It rarely does. But I'll say this as well in terms of a couple of different things. At its zenith in terms of the employment picture here in this country, there were north of 2 jobs for every person looking for a job, which was historic. We're now down to normalization of about 1.2 jobs every person's looking. So that is ratcheted way back. I've said this, I'll say it again. I don't think the job landscape is nearly as rosy as the pundits would make it out to be. And I think by the time you're listening to this, you're going to come to a similar conclusion. So that's this portion of a darkened week.
But Danny, the Fed doesn't seem to be too troubled by this, right? If you think about just some of the commentary out of Jackson Hole, what was that, like a week and a half ago or something like that? And just, it doesn't seem like they are prepared to move any greater than what the expectations are right now. I keep looking at, headlines all week that, rates traders are positioning for more than expected, but that seems like it would be like a little bit, we talked about this last month, a little bit of a panic relative to what economic activity is going on. And they just don't seem to be there right now.
I think the economic activity is strong. GDP has proven to be strong. Now, how that's compiled is a whole different issue, right? But so they've said, and he said in Jackson Hole again, they're focusing more on the labor market than worrying about inflation right now. The worst thing that could happen right now would be a stagflation setup. If we somehow start to get numbers in inflation that start to drift back up a little bit or just not drift to 2%, then they have a problem. And I think that's what they're nervous about, is getting ahead of that. What's the rush? So if the job number is shitty tomorrow, we know they're going to go 50 basis. They don't need to come out. If they do that, they're basically inducing potentially.
I don't think the stock market rallies. You know what I mean? If they basically do 50
I think
basis points.
Yeah, I don't either. But again, we're trading. People trade hourly in terms of how they're going to react to it. Bottom line is accept the following. Accept that the job market is slowing. Accept that the Fed cutting 25 or 50 will do nothing to help that in the near term. Accept the fact that the economy is still relatively strong, and accept the fact that inflation is coming down, but it's still high. And so all these things are baked in, and then ask yourself one question. Where's the market trading? And we've said this time and time again with these big tech stocks, Dan, and you've highlighted it. When they start to sell off, what is the buy point in this setup that we're in? It's hard to buy a stock at 35, 30, or 25 times that's coming off of 40 to 45 when you don't know what the long-term value is.
The one thing I would just say about that is that, whether we thought these stocks, the AI-related names were overvalued and the trillions of dollars of market cap that was, accumulated, because of the secular shift, I think there will be a buy point for all of these stocks, because I think there's going to be, we were just reading this, and Guy and I were looking at this report from the Information, was talking about how some Microsoft clients were testing, some of their 365 that got the Copilot and the OpenAI technology. They're just not seeing it to be that exciting. But it also noted that less than 1% of their enterprise clients are testing these things. So when you think about the opportunity that these guys will have over time, if you're looking to buy into this secular shift, you want these stocks to get hit 30, 40%, and then you just load up on them, because it's going to be a multi-year sort of thing.
That leads me to the second line. How even every winner hits a losing streak. Let's talk about a few of those winners. You mentioned Microsoft, which on the 5th of July made an all-time high. The stock has not traded particularly well since. That's a winner. Another one that I look at, C3 AI, that comes out AI, that was everybody's All-American, no longer. But the one which has a $25 billion market cap, and there are a lot of names we could sort of parse through. But again, sitting here on this Thursday afternoon, Supermicro, which, by the way, was a $1,229 stock in March, is now making a multi-year low south of $415. So when you talk about every winner hitting a losing streak, that's exactly what we're seeing in these AI and sort of tangential AI trades, Dan.
Yeah, so really quickly, so Supermicro makes the servers, right? So if you think about NVIDIA chips go into the servers, you have memory from Micron that goes into the servers. Dell also makes the servers. They go into the data centers, right? And they're training these models, but then you're also going to get to an inference phase. So, my view very simply is now Supermicro's got its own problems. There's like investigations, and there was, calls by a short reporter or something like that, that there's a bunch of
We talked about it last week, Hindenburg, right?
Yeah, right. And And so when I think about the potential for all these hyperscalers, that's Microsoft, that's Amazon AWS, and it's Google Cloud, to overbuild capacity. A lot of these companies would much rather answer questions about overbuilding than underbuilding right now. And so what happens though if the overbuild causes, the idea that they're just basically not able to sell these services based on the expenses that they did, and then you have this negative margin effect, right? So that's what I think investors are starting to price in. And I'll just mention this, Google is still well below its highs that was made just a couple weeks ago or whatever. So it's Google, it's Microsoft. Amazon is not doing particularly well relative to where, the S&P is. So it's underperformed on the way back too.
For sure. And listen, you've talked about this, you guys have, about these being hardware companies, some of them obviously at the very top being NVIDIA. It's not sustainable to have mid-70s% margin on hardware. It's just not. You get competition. Of course, you're right, Dan. Of course, this is going to be here to stay. The sector's going to grow. But I think what you keep talking about, and people are, what is the end user demand? What is the enterprise demand going to look at? And of course, you're going to want to order chips. Of course, you're going to want to be ready for it. But if we have a backup kind of orders in the sense of, all right, we got what we need right now, we're going to take a break. That's what the stocks are starting to reflect.
Well, we already saw that. We talked about this where, Elon Musk had a $500 million worth of these H100 chips coming from NVIDIA. I think it was a couple months ago, and he diverted them over to XAI because they couldn't use them at Tesla. They talked about the infrastructure not ready to do them. And I thought that was really interesting. So again, we want to look at Taiwan Semi. We want to look at Broadcom. That's going to be out by the time you look at this. I mean, 17% of Broadcom's customers, Apple, then you have Dell, so you have this whole ecosystem that I think, the bloom is coming off the rose in the near term a little bit.
It was priced to perfection. That's it.
I'll just throw NVIDIA out there as well. Obviously, they reported earnings, was it last week,
the 28th.
I believe. Stock reaction was muted at best, I would say that. Again, since June 20th, and we flagged that day, that outside reversal engulfing pattern day, the stock has not traded well, and I think there are more and more people that are going to try to start to punch holes in this, not necessarily narrative, although it's a big part of it, but in terms of the valuation where they're trading at on a number of different metrics. I'll say this, I think Bank of America this week or today had a positive note out on NVIDIA saying it's the cheapest it's been in quite some time. Maybe through one metric. On other metrics, not so much. So we'll see.
Yeah, really quickly on that, though. So the DOJ came out, and they're launching an investigation into non-competitive practices by NVIDIA. And, Guy, you and I were talking about this, I think, on Fast Money when it came out on Tuesday. The stock that day closed down 9.5%. The announcement of the investigation came out after the close. Some people thought they were front-running it. And so, Danny, to your point about, they make chips, and they have like 90% market share for high-end GPUs. The problem here is that the competitiveness is not about the chips that they're selling. It's about the software that they're actually overlaying, to use those and then use it for the upgrades. So that's where they think it's non-competitive. It's not too different than Microsoft loading their Explorer, this is 25 years ago, into their operating system because that is anti-competitive. That's what this is all about.
Who's the front person of the Pearl Jam? Eddie Vedder.
Yes,
no, I know. I'm just saying.
You can't do that.
Is he a songwriter as well?
Yeah.
So do you think
Prolific.
he wrote the lyrics to this song?
He probably wrote it with somebody else. You know what I mean?
Line 3. The mistakes we all made and perfectly repeat. I'll start. I've made a few mistakes. Now, more than a few, okay? But in terms of the stock market, there are two names that immediately come to my mind, and I know you have thoughts on both. I have tried unsuccessfully to at least paint a rosy picture for two names that everybody's heard of. The first is Boeing, which is we're sitting here down, is it $160 and change. It's been an absolute train wreck of a stock. And the other one has been Intel, which can't get out of their own way for a myriad of different reasons. So you would like to think you will learn from your mistakes. And that whole thing about the definition of insanity is doing the same thing over and over again, hoping for a different outcome. As it turns out, in terms of those two names specifically, the outcome has been exactly the same. Do not own it and do not try to trade it.
Well, Intel has not been the poster child for AI, right? It never really participated. They have their own issues. I think they have a huge stake in Mobileye, which is suffering and all that. So I'll let you guys tackle Intel, but I'm happy to tackle Boeing.
Please.
Because I think it's really interesting. So we're now a $100 billion market cap. Remember, 40% of their business comes from the U.S. government. During COVID, the government was about to give them a lot of money. Boeing basically took the backdrop of implied guarantee and issued another $25 billion in debt. And what's interesting about it is they're right on the edge of non-investment grade, right? So the triple B minus by all the agencies. The reason that's important is if it gets downgraded, and by the way, all the metrics you look at, debt to EBITDA already should be, it would trigger higher interest payments. The Wells Fargo downgrade this week just highlighted all the issues that we already know. When are the planes going to be delivered? Well, that's been a little bit delayed, obviously, with the issues that they've had. So the cash flow is not going to be there. Here's what's interesting. Yes, the debt is trading higher than AAA corporates, but it's not trading anywhere near junk on a yield perspective. And I believe that's because people know that the government's going to come. So you can go buy all the debt you want. From the equity perspective, I'm not sure. But here's the problem. When you have a for-profit company, right, in an industry like this, in my opinion, basically, whether they want to cut corners, it's about earnings growth, and that's their job to do that. You want the FAA obviously watching over to make sure that these planes are safe and so forth. And obviously, they're tied in with the military. So it's kind of this weird private, public-owned type of company. But when you think about it, obviously, if there ever was a, quote, bailout of Boeing, I would make the airlines, in my opinion, say, okay, we're going to give you better lease rates. We're going to pass that down to the consumer. We bail out banks. We bail out everything. So I know both administrations would be there for Boeing, but my point is you have a company that's not trading on a standalone. It's trading almost as a government enterprise based upon where the debt is trading. So they have a lot to deal with. It's hard to validate equity valuation at this point with $45 billion in net debt on the balance sheet and the issues that they know that we have. And God forbid there's an economic slowdown. So Boeing, to me, buy the bonds. Don't buy the stock.
Well, by the way, that net debt is half of the equity market cap. You know what I mean? So, like, I know this sounds crazy, but it's almost trading like a donut. I mean, when you think about it, the equity, and to the other point, is like the government has bailed out the airlines how many times in the last 40 years? You know,
they'll bail
so
them.
this is a point of national security, like you guys mentioned. I mean, this Starliner by Boeing has stranded 2 astronauts, up at the International Space Station. It's crazy.
They have 170,000 employees, of which 90% are in the U.S. There's a machinist strike of 32,000 workers potentially about to happen to them. So yeah, Dan, to your point, they're too important of a company both to defense and to the employment in the country. State of Washington, state of South Carolina, all these things that have gone on.
But really quickly, talking about that cash flow call. So if you look at on a net income basis since 2019, they lost, $2 billion. In 2020, we get it, COVID, $13 billion. In 2021, $5.5 billion. In 2022, $6.5 billion. And then last year, 2023, $3.5 billion. This year expected to be $2 billion.
They're not delivering planes.
But it's amazing. Right. I mean, I don't know what you do with this thing. Guy, you've talked, listen, your point about this is looking for spots to buy it. You're not talking about it as a long-term hold or whatever.
Yeah, but, my view, and I want to be crystal clear, my view has been wrong outside of a couple days here and there. My view is that they're not getting rewarded for this aerospace defense business, which is a very large component of what they do, in a backdrop where aerospace defense companies, for example, Lockheed Martin earlier this week, making an all-time high. You could Northrop Grumman, Textron, Raytheon, all those stocks have done extraordinarily well, and they should. Boeing, at this price, in my opinion, is not being rewarded for that. But I would have said that $40 ago.
Well, does the government, though, just take the commercial business and then they spin out the,
Don't know what I mean?
Like
we're getting way ahead. But to the point is that, maybe U.S. government shouldn't be paying so much to Boeing for some of these products that they're using for the Defense Department. And maybe we could make this like a win-win for everybody. But to the point, Intel and Boeing share very similar things now that you talk about it. Not in business, but in how you view the markets. Why was I going to play Intel as my, quote, AI chip play? And why would I play Boeing as my play for defense spending when you have other names? This is what we point out all the time, to play those, right? To play that theme. So, Guy, I don't disagree with the mindset at all. And listen, no one could have predicted how this delay in the ordering and these tragic crashes would be occurring, but it's starting to mount on them. They just issued $10 billion in debt in late April, near 6%. It wasn't like it was at 12%. So that's the part that doesn't jive either. It doesn't make sense you would have rates that low on the bonds and the equity not trade well, if that makes sense. So
it makes perfect sense.
So anyway, I like the bonds.
And that's why I threw the two of them together. In keeping with this theme, and I'm going to tee this ball up for you, Danny Moses.
Yes.
Although, Dan Nathan, you're free to play in this segment of the show as well. The mistakes we made, and we all made, and perfectly repeat. Well, happening before our eyes this week for the first time in, I think, over 2.5 years or so, the yield curve, which was inverted in terms of duration, the longest in history, going back to, I think, a period of time between 1978 and 1980, has now flattened, okay? People will say, and I think the mistakes they're making, is they'll say it's different this time. I don't think it is different this time. I think if you go back and look outside of maybe one instance in the mid-90s, as the yield curve re-steepens, it's typically the precursor, the harbinger of something negative happening in the economy. It doesn't happen the same day, but it sort of sets the wheels in motion. Is the market going to make the same mistake and say it's different this time? Or are they going to say, wait a second, maybe it's trying to tell us something?
It's been a precursor because obviously from an inversion perspective, that's supposed to predicate a recession. It hasn't happened. So now people argue, oh, so now it's steepening. Why do you think there's going to be a recession if there wasn't a recession when we were obviously inverted? I think things have just taken a long time to play out. So I think it is a precursor. And the reason that it has flattened, and I think we're sitting at 0 basically basis points difference in the 2-year and the 10-year, is that now the market's starting to price in the Fed being a little bit more aggressive. And if that continues to happen, I would expect that tomorrow, if the job number is bad, that we'll actually steepen to 10 or 15 basis points. And the scary thing is, and I had a great quote from a friend of mine, Rob Conrad, fellow Syracuse guy who runs a fund.
Great football player
for the Dolphins. And he said, this is about the 10-year yield starting to move higher based on credit concerns. How do you really trade the end of the world? So the answer becomes, if people are thinking that the yields are going to move higher on the 10-year because of the fiscal situation of the U.S., which may indeed be the case. If that's the case, I'm not sure exactly how to trade the end of the world. So if my point in this, I'll end with this, if we continue to steepen because the credit quality, people are nervous, not that it's a flight to safety, it's a flight out of safety, that's a bigger problem than we have.
Dude, your old partner, Steve Eisman, told us right here, no one's trading the end of the world. The end of the world's not coming from a financial standpoint. I mean, he said that on the pod. One thing I'll just say is kind of interesting. We do pods together all the time.
We pod.
I was on someone else's pod that you were also on earlier this year. That was the Wall Street Skinny.
I like those two.
They're great, right? And so they were asking.
I would not be allowed on the Wall Street Skinny under any metrics.
No, come on.
All right, go ahead.
Well, maybe Amanda will put in the show notes Guy's conversation, because I learned a lot about you from that conversation. And my conversation was interesting because we do a lot of the asking of the questions. We opine here and there. I don't get asked too many questions. And so I was thinking about, I told them I make some of the same mistakes that I made trading that I made 25 years ago. And so it's just kind of interesting that that's this portion of the show right here. And, NVIDIA is a great example. I mean, last year I got my balls blown off.
Whoa.
Okay. Like, I don't think,
Sounds painful.
I don't know if I ever had a winning trade in it, to be very honest with you. Now, that's very different than Tesla because, that was one where there's plenty of great trading opportunities. But the idea of going back and trying to get your money back in something, I've been doing that forever, and it sucks. I should learn, not to do it.
Before we get to some interesting stories, I want to go to the last line.
That was uninteresting? Is that what you're saying?
No, it was interesting.
So before we get to interesting stories.
That was an interesting tidbit.
Sorry, I apologize.
Yeah.
Before we get to further interesting stories.
Thank you.
That was Dan's therapy session. He just literally gave you a therapy
session. on the
session.
couch there.
I'm sorry. Combing through the wreckage is, so this suggests to me that if in fact there is wreckage out there, you can comb through it and find some things that are shining. I'll start again. I look at a couple different things. I mentioned aerospace defense. I think those stocks continue to shine. They're not part of the wreckage. They might actually be a beneficiary of such, number one. Number two, and we've talked about this for a while, gold sold off on August 5th like everything else did. That historically is what happens in big equity market sell-offs. You'll get collateral damage and other things as margin calls sort of hit up. Makes sense. That sell-off was very short-lived, Danny Moses, as we've come back in a major way. So I think as we crawl through, there's going to be continued opportunity there. And now one more thing. Some of these biotech stocks in the sort of the aftermath of what's going on with Eli Lilly and Novo Nordisk, they are going to get gobbled up. And as we get closer to year end, I'm almost convinced that you're going to see some M&A in the space around some of these smaller GLP-1
All right,
names.
before we get to Danny, I got to talk about Lilly because this was on my list today.
Please.
You had a 22% sell-off into the August 5th low. It crescendoed like most other stocks, was down a lot, closed on the high. That was your shot. I mean, that was your shot to get back into this thing. It actually, if you look at the chart, it came right back to that prior consolidation where it was from a couple months. So again, I think that one's really interesting because it went from, 940 down to, below 800, and then it rocketed back. And a lot of the gains back came in like a few days. And so here it was consolidating very near its prior all-time highs. Now it's breaking a little bit. And I think that, again, if it's not fundamental, if it's just because it's a crowded trade, you're seeing the same thing in JP Morgan. crowded trade. Obviously, NVIDIA was very crowded. So I think you want to kind of maybe look for, to Danny's point, some buy points in the very crowded trade, because they'll get overdone to the downside just like they did to the upside.
I couldn't agree more. And what's interesting about it is, yes, we've had this market being led by 7 to 10 names, for the past few years. But the truth is that fewer and fewer companies are still growing and still leading and still able to manage market, have like a miracle drug like GLP-1s and have the stuff, AI, these things that are occurring. Without those things, you think about what's going on in the kind of the real economy, and it's scary. So yes, the answer is when these things all get hit, you get opportunities to buy names, which we talk about. And yes, none of them got, quote, wrecked, but there always is opportunities. And so if you know what you own, it's not an issue. You're not going to panic out of the name, and you'll probably buy more. So
I brought up gold. I'm curious as to your thoughts. I think you probably share some of my thoughts as well.
Same thoughts. We had another kind of battle again with crypto here, where crypto didn't sell off like it did at the beginning of August, but very similarly had that retail kind of component to it. Gold has much less of it in terms of momentum and coming off. But of course, what do we say every week that we're on here? The sell-off is a buying opportunity in gold. You've been talking about the miners. The miners have started to really shine here. Huh? Like how I did that. And so listen, it's just people don't want to have to believe that they either need to buy gold or want to waste their time doing it because there's so many, quote, other exciting things. But slow and steady, Guy. Slow and steady.
Yeah, I want to make one point here, and you guys have been dead on, every dip in gold, you've been a buyer. I just want to go to the dollar here. So the US dollar index, the Dixie, and I think it was like late June, it was trading at 106, and now it's at 101. And so I want to go back to a couple of things that I think are probably good for S&P earnings, right? So if you think about this, inflation, again, the way it's measured, I got it, guys. Like, you know what I mean? Maybe, maybe a 2-something, cumulative, I get it. But inflation's coming down. The price of crude oil has come down. For U.S. multinationals with the dollar here, not bad, right? So there's a whole host of things that might be able to keep that 11% or so year over year earnings growth for 2024 intact. Now, the out year, 2025 at 14.5%, that seems pretty aggressive. That would be much better than a soft landing if the S&P companies were to do that. But just some of the big inputs, and then obviously if wage growth is moderating too. So those are some things that could probably keep, even with those top 10 names showing less participation as the overall number in S&P growth, it could keep things afloat.
To me, it's why is the dollar dropping? And certainly gold is a beneficiary of the dollar dropping. There's no question. And certainly some multinationals, which export, benefit. But to me, I think that's like a brief time period where you get to get the benefit of that and then start to really look at what is the really cause of the dollar weakening potentially. But I don't disagree at all that you could have a few quarters here that actually helps potentially earnings companies in the S&P.
There are movies. There are a lot of movies have been made.
Sure.
You have your personal favorites.
Yeah.
Danny, I'm sure you have.
You know my
Shawshank Redemption.
Shawshank.
Your Godfather 1, Godfather 2, Goodfellas.
Yeah, we know.
Heat is probably up
Heat
there
is a
for
great
you.
movie.
I know.
Well, I'm a big De Niro fan.
Yeah, of course.
And I'm a big Val Kilmer fan.
Correct. Who's not?
And Ashley Judd was in that movie as well, if you recall.
Yeah, you had a thing for her in like 93. Yeah.
But The Godfather, obviously. And in Godfather 2, Hyman Roth is speaking with Michael Corleone.
Laying down, I think, shirtless in a...
He is, which is not attractive.
No, not attractive.
At all. But
he
listen,
wasn't doing well that
he
week.
was a character actor.
Yeah.
Genius.
Like right here, Hyman Roth and Michael Corleone. It's
Very
kind of like
similar.
us. Yeah.
You're like a pizza bagel, the two of you guys.
But true.
Yeah.
But Hyman Roth said, and they were talking about what they wanted to build and what they were in the process of building.
Oh, we know where you're going here.
90 miles off of the coast of Florida.
We have a friendly government.
Friendly government.
But he says to Michael, we're bigger than U.S. Steel, which at the time was saying something. I mean, this is now the early 1970s when the movie was made, but, this was taking place in the 1950s-ish.
Yep.
U.S. Steel, big deal, right? Well, not so much anymore. Now, I bring this up, and there are political podcasts. By the way, I'll say this as well. There's not another podcast in the world that just broke down a Pearl Jam song using
I agree.
Is that true?
In a world.
Right? There's a
yeah.
genius to that.
Yeah.
I mean, people might come back years from now and say, wow, there was a brilliance. But obviously something is happening now. So U.S. Steel is a floundering company. I mean, I think we all can agree. They're in trouble. Nippon Steel has come in as sort of this white knight and offered in a friendly way to buy the company. They're going to invest over $1 billion in the company. They're going to leave the jobs in Pennsylvania, leave blah, blah, blah. The government, and by the way, this is seemingly bipartisan, both Kamala Harris and President Biden, as well as former President Trump, are against this. I think I know how I feel. My thing is, wait a second. Japan's a G7 country. This is one of our longest running allies. You would think if in fact they're going to make this type of investment, it's good for everybody here. But apparently there's this protectionist thing that's going on. I'm concerned, not necessarily about this deal specifically, but what type of message this sends going forward?
Well, I think around the world right now, we're seeing this all over the place, a lot of nationalistic tendencies as we, as you've seen this kind of anti-globalist sort of thing, it's happening all over the place, right? And so I actually think this populism, it plays for political purposes here. And the fact that you said that both, the current administration, the current candidate for president, and then the former president, who's also the candidate, it seems like a no-brainer here, right, to do this sort of stuff. So again, I think that, if in November we have a different president, we're definitely going to have a different president in November, we're likely to see maybe one of those two folks kind of pull back from that view.
I'll give you my thoughts.
Please. I'm interested in your thoughts. I set it up for your thoughts.
Cleveland Cliffs attempted to buy U.S. Steel first.
That comes out CLF.
Yeah, for $35 a share, right? Just so as point of reference, we sit here, the stock's around $30. It's come off.
That was late last year, right?
Correct.
Yeah.
Nippon comes in, which, by the way, already owns some smaller U.S. steel companies and bids basically $55 per share, right? So the reason this is getting blocked is the unions have come out, and the unions don't want the deal. They'd rather merge with Cleveland Cliffs. It's literally right out of the movie Wall Street, obviously one of our favorite, right? Anacott Steel. And so the point is, I think they're playing towards the unions. There's a chance that steel comes. I will tell you this. Things aren't great at the company. I'd buy the stock right here because either the Cleveland Cliffs deal potentially comes back to the forefront or this gets somehow union deal starts to occur and this deal happens. I mean, so the stock's at 30. So I'm not even looking at it from a fundamental base point. I'm, event-driven. These ARB desks that are all out there and trade this thing. To me, I'd take a shot here on this thing on the long side.
And when you say this thing, you're talking about U.S. Steel.
Letter X.
I bet it has about a $6.5 billion market cap.
Which, by the way, that stock symbol is very safe because Twitter ain't never going public.
No, that's fair. Yeah. And they deserve it. I don't know what their enterprise value is, but I think Danny makes an interesting point. I'll throw this in the mix as well because why not? What's going to wind up happening here is Cleveland Cliffs is not stupid. They're going to go to the government and say, okay, you don't want Nippon Steel in here? That's fine. We'll come in, but we need some guarantees. We need some safety nets.
Yep.
And we need some sweetheart deal structure, loans, those types of things, and debt forgiveness and tax, all kinds. They're going to ask for everything. And you know what? They're probably going to get it as well. I have a problem with that. I mean, is that free market capitalism?
Nope.
Answer that question.
No, it's not.
Dan Nathan, is it?
Well, what's interesting?
You don't want to answer the question.
It's how you play the game.
This has a $9 billion enterprise value. And we just spent 5 minutes talking about this.
But it means a lot.
But can I tell you something? If Elon wanted to take Twitter public and use the X symbol, he should just buy this. He should put in. He should put in a $40
I think you're onto something. He gets steel for his car. Somehow he'll convince the market that it's accretive.
Yeah, it would be amazing. And then he gets letter X.
Get a fee.
Well, I'll tell you the other thing is this XAI. I don't know if you're checking out the progress here. So this is his AI company, and didn't Tesla seed it, or there was something. I mean, there was some crossover,
and then they raised some more money.
But there was a story this week about So we were just talking about how he diverted a bunch of the H100s, the NVIDIAs, over to XAI. They built this cluster, and there was an article in the information. We'll put it in the show notes of 100,000 of these H100s, and it's like the biggest supercomputer that's ever lived. He's touting it, so we can probably tamp down that the expectations about that. But XAI could also use that ticker.
Very interesting. See what we surrounded that trade.
We surrounded.
No, I bring it up because given it's just a very interesting story. Again, the protectionist tendencies, and we don't want them coming in. I mean, remember, again, as I said, this is a supposed allied G7 country. Just keep it all with a grain of salt. There is a lot next week and in the ensuing week. So there's a lot to be looking for. Next week, we have some earnings that I think on the margins might be interesting, Dan, in the form of like an Oracle.
Yeah,
for
Oracle,
example.
Adobe. I mean, we've been talking about for a while just, how enterprise software, a lot of these SaaS names have really underperformed for the last, call it 18 months as the focus has gone to the hyperscalers and the handful of folks that are going to benefit from generative AI, or at least the investments that they're making. So to me, I think Oracle is kind of interesting. They're trying to make a push into the cloud. I think they're like a distant number 5 as far as market share behind, Amazon AWS, Microsoft Azure, and Google Cloud. I think IBM's in there too a little bit, but 2 consecutive gaps higher on their earnings, double-digit gaps, okay, to 52-week and all-time highs. I would probably be less excited about this name into the print, just for a whole host of reasons. It seems like a little bit of a value trap. Adobe, on the other hand, summer of 2023, like Salesforce, Adobe, they're telling a big story about generative AI, and the stocks have barely seen an uptick since that happened. So for whatever reason, investors are not particularly interested in these application software names, how they're integrating Gen AI right here, but I suspect in the next year or two they will be.
As I said earlier, as you're listening to this, there will have been a game played last night. Today as we're doing it, but last night as you're listening, and that game in the NFL comes in the form of the Ravens of Baltimore against the Chiefs of Kansas City. Before we get to that, these gaming stocks, some have done well, some not so much, but there's a lot going on in the space. You have a bit of an update here, Danny Moses.
Yeah, there's some M&A occurring. Obviously, stocks are trading well, I think, into kickoff. And by the way, not that you're able to view this on Twitter, but there is a Friday night game in Brazil.
Okay,
right?
I'm going to be a bit hypocritical here because I just came down and said, the whole protectionist stuff.
You did.
And now I'm going to say, on the other hand, I have zero interest in the National Football League playing games outside of the boundaries of the United States, the Etats Unis.
So that
flies
Packers
in the
Eagles.
face of what I. But I mean, come on. Do they really need to play a game in Rio de Janeiro?
Do you really want to
Berlin?
Do you want to validate $10 billion per team?
Listen,
Well, that's what it's all about. They don't
is
have
that what it's about?
Yeah.
Well,
So
that's unfortunate.
Well, that's the name of the game.
Because you know
guy.
what? There are fans of those teams that are going to miss one home game. I don't know whose home game it is, but
Yes.
they get one less.
Well, they're going to be an NFL team in all these places eventually. But anyway, DraftKings made an acquisition of
That's
Jack
a problem.
Pocket.
This isn't rollerball.
I love it.
Remember
We
rollerball
found
with
his
Jimmy
James
Kahn?
Kahn, yeah.
They had teams all over the world.
Yeah.
Tokyo, Houston,
Yeah.
no interest.
Yeah.
You notice the league didn't stick
Right.
rollerball.
By the way, just so you know,
That's
you always
the reason
introduce
why.
When you do the league where they pay for play, they also do that in the NCAA football.
Can we
now,
talk
so,
about what
we're
a
clear.
step down that was from playing Sonny Corleone to being in rollerball?
I
I mean,
mean-
come on.
All right, so
Rollerball, though, I
I-
will tell you, some of those scenes are pretty badass.
they're really good.
I mean, really badass.
So DraftKings,
But you're right, Dan Nathan.
DraftKings made another acquisition, a company that we know, a company that we've had the CEO on this show, a company called Simplebet, which is in-game micro betting using AI technology. What's interesting is they're a client of Genius Sports because that's where they get the data to feed in. This company, Simplebet, had been providing these kind of micro betting for all the platforms, but DraftKings was their biggest client. So without going into the specifics of the deal, there's rumors out there. I've been an advisor to Simplebet, not on the deal in any capacity, but just I'd been around for the ride a little bit on this thing. So again, I think you're going to see more and more of this start to occur, is that companies that can align themselves, and it gives DraftKings a huge head start from a technology perspective as a platform. So
Let me
very
ask you about
positive.
DraftKings for a second here, because on a GAAP basis next year, they're exposed to be profitable, right? And I'm looking at their expected revenue growth. So it's obviously decelerated massively, 100%, 110% in 21, 73% in 22, 64% in 23, expected to be 40% this year, 21% next year. So it seems like there's a lot of competition. Guy, this is also a global thing, right? Like these guys.
DraftKings is more U.S. focused.
Yes, but FanDuel is obviously over
much
there.
cheaper
Yeah.
too, FanDuel.
But it's just interesting to me. So the growth rates are coming down dramatically. They're just going to inflect from an earnings standpoint. You got to think that there's going to be like some reasonable margin pressure on these things, or no?
No, I think that they will continue to get new clients that come on board. I think those clients will continue to spend more money. I think the focus now, to your point, Dan, is to move away from these marketing costs, customer acquisition costs, and focus on building the company.
Well, by the way,
within.
I'm
And
looking at margins. They're going up. Like
Yeah.
the expectations are for that
right, and I
reason.
think that's
Yeah.
going to happen.
Yeah.
Listen, I prefer Flutter over DraftKings. It's much cheaper on a valuation perspective, and it's much more global. A lot of soccer and stuff in there. So I prefer that name over that one. But
By the way, the company you mentioned, that was the great Chris Bevilacqua.
right, Bevilacqua, who we've had on here, correct?
Is right the way I said that? See the
We'll get him
pause?
back on when this thing closes.
I think
Get him
you
to talk.
Bevilacqua.
you just liked having on so you could say the name.
It's a great name. As a matter of fact, I believe the family that owns the Reservoir Tavern in Boonton, New Jersey, is the Bevilacqua family.
Hey, by the way, have you ever been to Belmont Tavern?
Yes,
That
it's a very
place.
famous place.
Didn't you guys have this
Amazing.
exact discussion?
No, not on a pod.
No,
I
no,
might have had
no.
it personally.
No,
But
it's an.
You want these
excellent-
picks? Are we getting to pick?
I went there a few
I
weeks
know
ago.
what's coming. And how was it?
Chicken Savoy. That's all I'm going to say. On the sign, Danny,
Chicken
this place
Savoy.
is
That's
so old
chicken
school.
with balsamic vinegar.
Correct.
Thank
It says basically Belmont Tavern, and then right below it, Chicken Savoy.
Yeah.
That's all it says.
Well, now after this, it's going to say, welcome, Dan Nathan.
welcome back.
Welcome
Dan.
back, Dan Nathan.
Well, welcome back NFL season.
Yeah.
And welcome back to a Danny Moses who, in his first year, was Kreskin. It's as if you had a crystal ball. Not so much. Second year. Last year was meandering. But again, it's all
Finished
good.
hot. I finished strong.
No, I understand.
Yeah. Well above 500.
Week 1.
Yes.
3 games.
I already gave out. So last week, so as people listen to this, they will not have had the opportunity. That's why I gave it out last week. I love the Ravens catching 3 at Kansas City. You short Super Bowl winners against the spread. Particularly, we have back-to-back Super Bowl winners. I like Baltimore. They're hungry. They're out to prove something. So that's tonight. Maybe I'll
Take
tweet
the
that out.
Ravens and the points. Danny will tweet.
Yeah,
Danny
and if
will
I
have
win, I
tweeted
get the
that
counter.
out
If it didn't, you didn't lose because you didn't get this in time. So
I like
yeah, it's a
what you did
perfect win
there.
for me.
Okay.
Houston, C.J. Stroud coming off an incredible rookie season.
Great
I
season.
think he's the best quarterback in football. I will say that.
Whoa.
Well, you know, you got your Daniel Jones, but let's
I
just
mean,
keep
now
going,
you're getting
please.
a little ahead of yourself.
Houston -3 at Indy. They won there by 4 at the end of the season, and Houston hasn't been this healthy. Obviously, everyone is coming into the season, but I like Houston to run off that. And then the really interesting one is Chargers, Harbaugh's debut, right, against the Raiders, who just named Gardner Minshew as the starter. I will tell you that Herbert and Harbaugh, who have never obviously worked together, they're both incredible in week 1. They're both incredible. Like Harbaugh, I think, is like 5-0. Herbert's like 4-1. I think they'll be prepared for this. I think they're the better team. I think the Raiders were ending last season on a lot of emotion, new coach and so forth. So give me the Chargers -3.
Like
so
what you did there. I like your picks. I'll say this. I don't think people are going to give the Chargers their just due all year. I think they will surprise people with this new coaching staff. They have a very good roster, and I love the quarterback. I don't think the Raiders are ever any good, number one. I think Houston at Indy, I think Houston can put a whipping on them at Indianapolis.
That'll be
That's just
interesting.
me.
That's a tough to win on the road in the NFL. I get it, but the line's 3 anyway.
By the way, a Friday night game, if that's that's the road we're going in the NFL, in Brazil, to the bone, that's a problem.
It's all gambling, guy.
I don't care what.
You know that there's an NFL and NCAA game every day of the week now?
Listen,
it used to be just Saturdays and Sundays. It's every single day
wrong.
of the week. Well,
it's wrong.
how can
something
so right? Go ahead.
Being born in 1963, late of 19, Sunday, 1 o'clock, Sunday, 4 o'clock, Monday Night Football. That's it. No Sunday night game, no Thursday night game, no Friday night after Thanksgiving. It's all bullshit.
By the way, I love Vinny. The Jets are setting stuff massive
I
disappointment.
agree with
in my
that. And we'll
opinion,
talk.
so.
We'll get into
Anyway,
that next
enough
week
of the
because
football.
they are the Monday night game this week in San Francisco, who may have the best roster in the sport. We shall see. Any closing parting words, Dan Nathan?
No, I mean, I think that, again, by the time you're listening to this, you'll know what the jobs number is. I think the survey is for 4.2% unemployment, down from 4.3. I suspect this comes in just in line. And so it'll be interesting to see what happens on a Friday afternoon, because quickly we're going to start getting focused on CPI. We already had that PCE print, and then the Fed. You know, the Fed starts what, SEP 18? Is that when we
So the Fed is 18th, BOJ is September 20th.
Yeah.
So there's another big week coming in September. And historically, September has been a bad month for the markets because 2 weeks in the end of September, buybacks stop happening and all that stuff. So it's already setting it up seasonally to be a very volatile month. I think September will, again, like it was last year, be volatile again.
I hope you enjoyed us breaking down the Pearl Jam.
Yeah, that was great.
However, the survey says we've run out of time here on the
I just want to make one point about so Danny started off by talking about this new album. So it's called Dark Matter by Pearl Jam.
Dark Matter.
Yeah, I'm generally in the camp when you are like approaching 30 years as a rock and roll
34
band.
years, they wear Walter Payton
but you
jerseys
should
around.
stop. I'm going to say, I said 30 because their last album that came out in 2020, Gigaton, was not a great album.
Gigaton.
You know what I mean? Yeah, it was not a great album. And so this album, though, Dark Matter, that comes out 4 years after that prior one, is excellent. I mean, like, and Danny agrees. And they've been playing 6 songs from the new album on each of these tours. They usually play 23, 24 songs, and most of them are really good.
So
And
we got some listeners in Philly. Get out and go see them. Not
Saturday
that they
night.
need the support.
No, but what I'm saying, there's a handful of songs that will be integrated into their set list going forward. So I was really happy about Dark Matter. Great album.
Dark Matter. It's on my Desert Island disc collection.
There you go.
No, but it's part of a mosaic, guy. So last night they played 5 songs from their second album, Versus. They played 4 songs from their first album, 10. People were excited about Leash. They were excited about
It was great.
Glorified G. And then they played 6
I'll be
songs
honest
from
with you, I
this
didn't think
album.
the show on Tuesday night was near as good as the show.
I thought they were. I never like. I have something, and I told my wife this. This is. I think this is like a big thought. So every time a fan goes into MSG, whether it be for a Knicks game or Rangers game, half the fans come out disappointed. Right? Their team didn't win. Every time I go into MSG to see a band that I love, everybody walks out really fired up. So it's 100% excited on the way out versus 50% excited on the way out for sports.
I have a problem with that.
Why?
If you go to a sporting event at Madison Square Garden and half the fan base leaves disappointed, who the fuck are those fans in the first place? 100% of those
could be the
fans.
opposing team.
Bullshit. Not in New York. That shit might fly in Texas or it might fly in like Chicago or Boston. But if you go to MSG to watch a game and the Knicks or Rangers do not emerge victorious, you walk out of there pissed off.
That's what I'm
100%
saying. You're making my
you
point.
Said 50-50.
No, he's saying if they win or he says if, assuming they win half the games, and lose half the games.
My point was that you have a 50-50 shot of walking out excited that your team won.
Right, I knew exactly what he was saying.
That's not what he said, though.
Yes, it is what he said.
This
is all getting
should
cut.
we
no, don't cut it. Yeah. Leave it in. People need to hear this because they say we don't argue enough.
World's greatest arena, is that what is it?
World's most famous
arena.
But Danny, you get my point, and you agree with it? That's why but my point is, Guy, I love live music more than I love live sports. Yeah. And I love being a fan. But it's like, as a fan of music, they literally have to go out there and take a shit on the stage to be disappointed for a band that you love. That's my point.
That happened to one of the Jonas Brothers.
No.
And now is at a point where we need to stop, because once you go down the Jonas Brothers
I don't even know what's happening.
It's too much.
Yeah.
Thank you for joining us. Next week, who's our guest next week? Do we know yet?
Yeah, we do, with Michael Wilson.
Mike Wilson.
Yeah, from Morgan Stanley.
That's good timing on that.
Mike, yeah.
So stay tuned for that. Market Matrix. Smash the shit out of the like button for all different things.
Yeah, do that.
And enjoy this week 1 of the National Football League. We'll see you next week.